Welcome to a new update. Today it's another day in which Powell has been speaking. As you can see on the screen, it's an account called Financial Juice where you can find all the information required if you want to stay tuned on the markets. Today it's Powell's day again. We also still have Silvergate. We also have the Mt. Gox date that's coming up in 2 days, hence why the markets are dropping down a little bit. We also have the SEC case against the Grayscale, which is turning positive. We'll be discussing that a little bit as well. But today it's more about Powell and the unemployment data. Before we continue, make sure to hit the like button, subscribe to this YouTube channel, and also check out my Instagram and other social media channels. If you want to copy trade my portfolio or get more trade ideas, make sure to join our platform. What we see here is a summary of what Powell has been saying. Today is nothing different from the news as what we have been seeing previously. Lots of information has been shared yesterday already, in which Powell stated that he is going to increase the hikes and continue to do so as the CPI data comes in higher than expected, or the inflation data is sticky, which results into the federal funds rate to be higher as expected, and therefore also they continue the hikes, which resulted into the expectations of the March meeting to result into a 50 bips rate hike instead of a 25 bips rate hike, and therefore today is the second day of him testifying. Here is another topic which is not often being discussed, but it's about the debt. He actually said yesterday that they will be increasing the debt level, or that is a solution for the debt that the US has right now, but people are not discussing it too much. But the one that he is actually hurting the most is the US economy or the US government themselves, as increasing the federal funds rate will require them to pay more on their debt, which will require them to increase the debt level or print money to pay for the actual debt they have. And there you get into the spiral. So further, not much has been said here. He's just saying the exact same topics as what we have been saying yesterday. One final thing is that China's faster reopening could have an offsetting effect on inflation. Yes, that's why we are seeing a little bump up on the inflation from here. Inflation is most likely to continue falling, which he has also been saying, but the markets in itself are continuing to price in a potential impact of this. And then we are going to look at what we could be seeing here. First topic we want to discuss is what should you be looking at if you want to know more about inflation? Well, you have to be looking at the case of the 2-year yields, or better even, you have to be looking at the 6-month yields, which is currently rallying up still. As you can see, we have been seeing the exact same with 2018, 2019. It's getting to the end stages, and in order to get to the end stages, you want to see unemployment kicking up, or you want to see some other bad economic data getting into the markets through which it has to turn around. At this point, we are into the final bump. I assume that CPI comes in positive next week, which is going to result into the markets turning into a positive momentum again. Well, we can see that the government bonds, which is technically the closest towards the federal funds rate expectations, have been continuing to rally, and the past few days have resulted into a break from 4.95 to 5.15 and currently stabilizing at 5.07. The 2 years have been seeing the exact same breakup, but it's showing that it's going to have a reversal relatively soon, and that the markets aren't really pricing in what Powell has been saying. What do we see even more? The dollar has been showing strength, and I've been discussing this topic previously, but we're getting into a resistance area for the dollar. There are two, which is taking off this high here we have at 105.70. That's resulting into a potential case of a reversal, and it's getting into the second heavy approach or heavy resistance, which is the pivotal one around 106.30. That could be being to the unemployment data or CPI coming out next week, which is going to give a solution for the markets to turn around, right? What do we see even more when it comes to gold? Gold has been seeing a slight sell-off taking place here. Potentially the trend continues to fall down, very much in line with Bitcoin, as you can see, and also the Nasdaq. The indices are currently showing a consolidation period, but it's not showing that we continue to fall at this point. So most likely Markets aren't really believing the policy from the Fed and are suspecting that we are going to see a continuing of the rally on the markets and that he stops the entire policy. Now what we see here is another interesting topic which is intrinsic for the crypto markets. There's one which is Silvergate, which you can find here as well, which is a potential bankruptcy of the fiat on-ramp and off-ramp case of Silvergate, which is not unexpected. They have been falling down due to FTX, and currently the suspicion is getting higher and higher. They are in talks with certain entities to make Silvergate solve it again, because it's such a viable party for the cryptocurrency ecosystem. If this one goes bankrupt, you could be sure that we're going to have another 10 to 15% correction. But on the other hand, we also have the SEC case against Grayscale, which is turning out to be more positive than expected, and therefore the Grayscale Bitcoin Trust made a new yearly high, and the discount between the price of Bitcoin and the price of the trust has been diminished towards 30%, which was way higher. The discount was way higher because people wanted to sell their Bitcoin, which was in the trust, as they believed that Grayscale was going to go bankrupt. Now we start to rally up, and it shows that there is a strength on the rally here for Grayscale. And you can see that the price action for this trust is very much comparable to the price action of Bitcoin. And then you could conclude that Bitcoin is lagging behind a little bit. What am I looking at? We are currently into this support area. We've got two pivotal areas. First of all, we've got this level 21.7. We've got the level 23.5 here. If we lose 21.7, then we get this scenario, and then I'm interested into longing when RSI is going to be reset and when we get into a higher low again. So then we take the liquidity here, reclaim the level, and then we continue to rally from here. The other scenario that I'm looking at is a reclaim of 23k, and then we can start targeting the highs. Overall, markets are into a state of consolidation, which results into altcoins selling off, which gives you the opportunity to buy into those. Make sure to just remain calm, have a longer term horizon, and stay patient. I'll be back tomorrow with a fresh new update. Bye.